China's latest move to boost consumption isn't meant to jolt all kinds of spending. Policymakers last week doubled subsidies for a consumer trade-in program to 300 billion yuan, $41.47 billion this year, matching market expectations, and again steering clear of cash handouts. The subsidies will go toward around 15% to 20% of the purchase price for select products, including mid-range smartphones and home appliances. That's an expansion from last year's 150 billion yuan program, announced in the summer, for a narrower range of products. The new round of subsidies are pretty substantial and will likely support retail sales, similar to how e-commerce companies saw a sales boost in certain products late last year. Jacob Cook, co-founder and CEO of WPIC Marketing Plus Technologies, told CNBC on Monday. While there's skepticism that the impact of a one-time subsidy won't last long, Cook said more subsidy programs will likely follow. He added that China's aggressive 5% GDP growth target and prioritization of consumption indicate that Beijing will do more to support growth, without relying as much on the old playbook of infrastructure spending. Chinese Premier Li Qiang last week delivered an annual report on government work that named boosting consumption as the top task for the year ahead. That's the first time in a decade that Beijing has given consumption such high priority, said Laura Wang, chief China equity strategist at Morgan Stanley. She added that the government work report cited consumption 27 times, the most mentions in a decade. While Beijing has not followed the US or other countries in handing out cash to consumers, Chinese policymakers have increasingly acknowledged the need to counter deflationary pressure at home. China must focus more on domestic demand given the possibility of new shocks to overseas demand, Shen Danyang, head of the drafting group of the government work report and director of the State Council Research Office, told reporters Wednesday in Mandarin, translated by CNBC. China's retail sales grew by 3.5% last year, a sharp slowdown from 7.2% growth the prior year. In a sign of a persistent drop in demand, China's consumer price inflation in February fell below zero for the first time in over a year, according to official data released Sunday. If prices are too low, it becomes difficult to incentivize businesses to invest and increase consumers' income, Chen Changsheng, member of the drafting group of the government work report and deputy director of the State Council Research Office, said at the same press conference on Wednesday. He noted that the work report called for 4 tasks to address the depressed prices: expanding fiscal support, working to lift consumption, using regulation to prevent price wars, and making a greater effort to stabilize real estate prices. Real estate accounts for the majority of household wealth in China. A crackdown on property market leverage in 2020 spurred a slump that only started to turn around late last year, after a high-level policy call in September to halt the real estate sector's decline. Stabilizing real estate can have a significant effect on boosting consumption, similar to wealth effects from a rise in the stock market, said Meng Lei, China equity strategy analyst at UBS Securities, noting expectations that the mainland China share market has become more strategically important. Stocks have rallied after China's stimulus announcements in recent months. The 300 billion yuan for the subsidies comes from an increase in ultra-long special government bonds for 2025. China said last week it is raising its deficit to 4% as it pursues proactive fiscal policy. Also helping sentiment are signs that Beijing appears to be turning more business-friendly. Chinese President Xi Jinping held a rare meeting with entrepreneurs last month. Once businesses are more confident, they can hire more and increase wages. The Chinese premier at the high-level meeting last week vowed more efforts to promote residents' income growth and ease financial burdens for low to middle-income groups. The officials pledged more support for the care of the elderly, children and the broader healthcare system, steps seen critical to bolster the country's safety net, allowing residents to feel comfortable spending more. To a certain extent, these measures can help to reduce living costs and release potential consumption, said Pan Xiang, a macro foreign exchange analyst at Nanhua Futures.